And time. It's time. Secret Wars. The grind. Keeping at it. This time with Encana on the TSX. ECA ticker. And I got an alert today for it. So I decided to go check it out. And here we are today. Let's look at what happened here. Got a stage one back in 2014. Nice break above the resistance. Look at these candles right here. Not exceptional volume, but it's delicate. Maybe 50% more volume than the previous average 4 or 5 weeks on this candle here. This one here. What about the RSI? RSI going above the 50 point, the halfway line into upwards territory and above the 30-week moving average. Horizontal line breakout, A+ setup. Not bad, Stan. Maybe that volume could have been delicate, but it's not a bad setup. So right there, what you would have had your nice stage two. And you would have maybe bailed here at the trendline violation for traders and investors. And the remainder, here's would have been your sell stop right here. You would have taken the remainder here. So you would have rolled. This would have been a nice, powerful stage two. Get triggered out. And see how it is back here. You don't know, right? You say, I might go on forever. Well, if the trend line's broken, the trend line's broken. There you go. It's back here. If it's broken, then you're out. Who knows if it's going to continue going upwards or not. All you have to do is wait for a continuation pattern if there's one. And if there's not, then that stage two becomes a stage three, which becomes a stage four, as you can see right here. Here, maybe you could have said it was the top. Breakdown here on this candle. The only thing I see wrong with this one is you have that support, that green cloud here. And you see when it breaks straight under. So right now on the following candle, you could have entered this as a valid stage 4 breakdown right here on this candle. Sideways action. And if you didn't enter on this one, you could have waited, put your alerts at the about that 20 level and wait for that other candle to break down. And then you could have just shorted, keep it on. And here's your trend line. 1, 2, 3. You would have taken your exit, traders and investors, half your position right here. And the remainder half right here. You would have moved your sell stop along the way to this pullback. And when the price action starts going back down to previous lows, you put your sell stop here. Price action goes back up. Traders, you would have bailed here at the 30-week moving average. Investors, you would have bailed there also. You have to remember, Stan is a provision for investors change their sell stop technique when they get close to the end of a stage. For me, when the trend line violation, you've already taken half your position out, then it's not a good sign for the continuation of the stage. At least there's going to be might be a consolidation. And traders, investors should also pull out at the same place as traders do. So any violation of the 30-week moving average, you're out. And you just wait for the next pattern if there's one, or move your risk to another stage 2 or stage 4 that's in its early stages. That was pretty nice. Let me just see the breakout, that RSI. Yeah, RSI was going from the 50 point downwards. And was there volume for that candle? I keep practicing. It's really for me, my subconscious to register this triple confirmation. I might not have done that back in the days when I first explored the Stan Weinstein ways, and I think in 2007 when I read the book the first time. And right now it's getting clearer and clearer for me exactly what works. And I reconfirm every time these triple confirmation patterns over and over. And since I've been doing them, I haven't had many fails. Honestly, I don't know. I haven't had many fails. There's multiple stage 2s cycles, stage 1 to stage 2 to stage 3, stage 4 in a 5-year pattern. Like you can see now, right now we had stage 1, stage 2 breakout, stage 3. And for that same chart, you can see that most of the time, if you would have waited for the good signals, and the way I play them, you would have ended in profit all the time. Once in a while, you might get in choppy waters on the stage 3s and 1s. But I believe eight times out of 10, you end up in profit. So which one? Okay, here was my breakout candle right here. Enter here. Sell stop as a trader and investor, maybe right here under 30-week moving average, under this pattern here. And this is your risk. Your size would have been, you size your entry to be 1% of your NAV. So the risk here, from that 21 and pennies to 18.50, of that risk, that $2, you multiply that, you buy enough shares for that amount to equal 1% of your NAV. And that would have been your risk, and your reward, you would have exited half of your position right here. As I said, on the pullback, you would have moved your sell stop, and the other half of your position on the violation of the candle right here. So that's what Stan usually says. Trendline is probably the highest target, the highest profit, the highest reward, and it says it's somewhat lower the following half of your position, either the previous lows where you move your sell stop or the violation of the 30-week moving average. Why don't you take out all your position at the violation of the trend line? I guess you could. I guess it could be good. I haven't seen many occasions or any occasions for that matter, that the trendline violation was violated and the price action actually did not go into stage 3, that came back, that did not violate a previous sell stop, and that price action went back up to higher levels, and I would have been happy to keep that half position. It didn't happen many times. I guess it could happen for the investor, but I just don't see the advantage of doing that. You should probably maybe take out all your position on the trendline violation and just add on if ever the price action goes back down and consolidates, and you could just replay continuation pattern as the price action gets closer to the 3-week moving average. I'll just consider that. Maybe it's a question I could ask on the stageanalysis.net. See what they think about that. Always room. See, the more you look, the more you learn, and the more you ask yourself questions, and that's in the state of mind you want to get into. You want to ask these questions, those focused, deep dive questions where you're able to enhance the framework and to get the most out of it and really understand it. So anyways, half the position here, half the position there, so your reward would be probably a little bit in between. So here was the risk, and the reward. So 1 in 110, 1.10. So risk to reward 1 to 1.1. And that's not super duper, but since you're reaching your target a high percentage of the time, I would say 80% of the time, that you're in the money because you move your sell stop and you're not losing that 1% NAV, it's pretty good. Okay, stage 3, let's go down. Stage 4. Stage 4, and okay, here we've been out the trend line violation. And what happened here? You see the stage 4 continued. See, trend line violation, that means there's a weakening in the momentum, and it went down all the way to hit that 30-week moving average. That didn't pan out to be a stage 1 to become a new stage 2. The price action kept going back down, but it's just like I said previously. The price went back down, and here you would have had an opportunity after it breaks down below this low right here. Just as somebody would be doing just classical charting pattern, he would have just seen a consolidation rectangle and would have played this to the bottom. You would do the same thing right here, and you would enter on this candle right here. Volume on the back, on the falls, on the breakdowns. This candle has twice the average volume maybe of the previous 2 candles. Then you have the fear factor added on top to that. You have the moving average, the RSI going down in the negative territory. You could have shorted here again, right here. So sell stop right above the 30-week moving average, or above the top of the pattern for the investor. Entry right here, and down we go. Pull back. Wait, price action didn't go back. Sorry, go back down. Pull back. Price action didn't go back down towards close enough to the previous lows. You haven't moved your sell stop yet, and you're still in the trade. Your sell stops are up here. And pull back again, and then okay, here the price action goes back down to your previous lows. Here you could have moved your sell stop right here for trader investor, since that's where the pullback is. And you see right there, now you're at a pretty much even trade, which is pretty good. And then it just continued going down. Do I have a trend line? Yeah, eventually here I had a trend line, but right at the bottom. So right here, because that trend line is not aggressive enough. You see, it's like the same way as the 30-week moving average. And since traders and investors close towards the end of a stage, they get rid of their positions anyways. That's the least steep trend line that's worth it. If I would have had a trend line even like this, it's kind of useless, because the 30-week moving average, I don't want to be on the south side or on the wrong side of the 30-week moving average to hold a position. Really, really risky territory there. And let's see right here. Price goes down here, pull back. Price action goes back down right here. I look at the RSI. See, when I say U, for me, that's a price action that went back up and down. So here's the sell stop for the trader above that pullback, ideally above a round number. So if it's $6, we would have put a 601, 605. And here we go. So we're done. Candle goes back up. Traders take half of the position here. Investors are still in, and the price action goes back all the way here, and investors and traders liquidate everything right here. So it took a little while. It wasn't very aggressive stage 4. And here's your profit right here for the trader, half of their position. And investors right here about. That's how I would have played it. That's how it should come down to. These are weekly candles. I just know that there's a lot of whipsaws or up and down motion. It's normal, unless you gotta expect that. And if you expect it, you won't panic when you see it. And if you don't panic, you won't land on emotional landmines. And look at that. Look at these huge candles right here. This could have been the beginning of a stage 1. But since you're still under all this resistance, maybe not the optimal place, and you're under a 30-week moving average. So where's the breakout for us? It really eliminates a lot more charts if you have to wait for the Ichimoku cloud to dissipate before you get in. But there's you're just putting the chances on your side of entering the side on a good trade. So you would have had to wait for this candle right here. And this is a nice bottom, nice solid bottom. Remember, the larger the base, the higher in space motto. Well, if you have to wait, then you're just putting chance on your side, right? You're not missing out on anything if you're waiting. You're just waiting for the pattern to be better and better. So when it does explode, you're good to go. What do you have? Okay, breakout candle above the horizontal line, above the 30-week moving average, going upwards, above the resistance of the cloud. What we have? The RSI was already, it's not as bullish as going over the halfway point. See, Stan would have liked that. High volume, crazy volume, sustained volume. Going over the halfway point into positive territory. Man, this is like a true breakout right here. This is just putting all the eggs on our side to increase our probabilities. And you could also see this as a continuation of the original breakout that was back here. So if you really want to get in at the beginning, this would have been it. And if you would have wanted to waited for continuation as the price action gets closer to the 30-week moving average and consolidates, this is actually a continuation breakout right here. Less volume than we had before, maybe 10-20% more than the previous 4 weeks of volume. And that's all she wrote. Off she goes right there. Look at that. Nice trend line. I get one shot? No. 1, 2, 3, 4 points. And profit. Here you go. X marks the spot. Traders, investors take half their position here. And actually, here you go. Pullback. And traders would have taken half the position here also on the pullback. And investors would have taken all of their position, the remainder right here at the 30-week moving average. Not bad at all. So that's good for that stage 2. Then we go another stage 3 right here. Same shenanigans. You have the breakdown here, but you have that cloud of support. And look at that, man. Lo and behold, it's like magic. Look at that. See all that? Ooh. The red line is like the last support that you have through the cloud. And it's just bouncing off that like magic. And it continued a little bit. Refused to go down. And we're still in the stage 3 right now. So right now, okay, we're either in the stage 3 or stage 1. And this is what I want to get to. I want to set my alerts right here at the 17, almost 18 level, 1750. I want to put my breakdown level right. The ultimate breakdown level is right here at the 1075 level. It's ranging pretty nice. We just have to wait to see. Now it seems to want to go into a stage 2. There's no resistance above. There's no support below. It's really when the longer this base is forming in a tight pattern, the more that cloud is just going to get thinner and thinner, and we could pop in either direction. But I like the pop right now on the upside. The RSI seems to want to be going up over halfway territory. And it's just a question now of having that candle with volume right here and having that breakout line. Hopefully the breakout line will be at 1750. Remember, Stan says good A plus setups that breakout, they already have a 40 to 50% move before, and I think that's where we're going to get right here. If you could move from the bottom here, 13 to 17, that's about that's a good 50-60% right there, and that's what you want for it to pop up. So after that, who knows, right? It's going to be another stage 2, and we get to play it the same way as I showed you here. That's the same way play it, and keep practicing it. If you have a software, and the more you take your time, the more you look at the candles, and you really make sure that the candle's the one with the volume, and you just like grind through it methodically, slowly. And this is what's great about doing these podcasts in the series. I'm really able to take my time and challenge myself, and if I have feedback, then take that feedback and try to really figure out everything. And the more your brain programs it and thinks about it, the more you become a master at it, and that's how you do it over time. This is the best way to do it. Time, practice, repeat that, consistency, and the money will come. You won't make mistakes with framework. You won't get emotional. You'll just do these arrows, triple confirmation, draw the trend line eventually, and that's it. All right, ECA, man, you're looking good. Hopefully, I get to add you to the candidates list. You are a candidate, actually. I get to play you. All right. See ya.